Infinite banking. In this video, we'll be sharing more about infinite banking and how it can help you alleviate you from your financial crises and improve your financial life. First things first, what is infinite banking? Infinite banking is a method of becoming your own bank by borrowing against a permanent life insurance policy. Consider never having to deal with a credit check, high interest payments, or applying for a car or student loan again. Through infinite banking, this could become a reality. Being your own banker can be an advantageous tool on your path to financial independence. Examine the infinite banking concept in greater detail. By leveraging the value of a dividend-paying permanent life insurance policy, you can become your own bank with infinite banking. Infinite banking, invented by economist Nelson Nash in the 1980s, allows you to access the cash value of your policy by borrowing from yourself and repaying yourself at any time. The concept of infinite banking revolves around a whole life insurance policy. Whole life insurance, as opposed to term life insurance, is a long-term policy. This means that the policy is guaranteed for life if the premiums are paid on time. A term life insurance policy, on the other hand, only lasts for a set period of time, such as 20 years, or until a certain age, such as 65. Whole life insurance premiums are higher than term life insurance premiums. Your monthly premium payments are divided among three components. A portion of each premium payment is directed toward the cash value savings portion. This is a unique feature of a whole life insurance policy because you can borrow against the growing, tax-deferred cash value portion to fund major life expenses such as home ownership or college education. When you follow the principles of infinite banking, the cash value of your life insurance policy will allow you to become your own banker. The amount required to begin infinite banking will be determined by your life insurance policy provider. Because age can affect the cost of monthly premiums, it's often best to begin as soon as possible. Because you can only borrow against the cash value savings portion of the insurance policy, you must contribute a significant amount of money to the policy over time before borrowing against it makes sense. As a result, infinite banking may not always be the best option for the average American. While many Americans have never heard of infinite banking, it is a legal way to borrow money without using traditional banking. Of course, the infinite banking concept is not for everyone, and it has both advantages and disadvantages. According to the Federal Reserve, debt repayment consumes 9.58% of Americans' monthly disposable income. Through privatized banking, infinite banking focuses on redirecting that money back to yourself. Here are some of the benefits of infinite banking. You may borrow for any reason without explanation. No credit checks are required to borrow. Distributions, loans, and withdrawals are all tax-free. You can contribute more money to the value of your policy. You can lend money to family or loved ones from the cash value. In general, interest rates are lower than on a traditional loan. You have the option of repaying yourself at your own pace. The drawbacks of infinite banking. Infinite banking necessitates a long-term strategy and a great deal of discipline. The insurer will not make regular payments on your behalf, but will expect the loan to be repaid. It is your responsibility as your banker to be financially responsible. There are some drawbacks to this. The monthly premiums can be quite high. Unless you make other arrangements, the life insurance company will absorb the cash value upon your death and pay the death benefit to the beneficiary. If you fail to repay the loan, the amount will be deducted from your death benefit. For older people or those in poor health, qualifying for a new whole life insurance policy may be difficult. If the idea of funding yourself appeals to you, here are some steps you can take to get started in this video. Here's how to set up an infinite banking system with a life insurance policy. 1. Begin when premiums are lower. Premiums are lower when you are younger, as with all life insurance products. Because your premium is fixed for the life of the policy, the earlier you enroll, the better. 2. Select a reputable insurer. Infinite banking is a lifelong process, so choose reputable life insurance companies that you know will be around for the long haul. 3. Select a policy of non-direct recognition. Whole life insurance policies return your investment in the form of dividends. However, if you borrow against their value, the insurer may only pay dividends on the amount in the account. Even if you've borrowed against it, a non-direct recognition policy will pay you dividends on the full cash value. 4. Select a policy that includes a cash value rider that benefits your loved ones. In most policies, the cash value is absorbed by the life insurance company upon your death, and the death benefit is paid to your beneficiary. Add a rider to your policy that gives the beneficiary both the cash value and the face value to avoid losing the cash value you've built over a lifetime. 5. Incorporate a paid-up addition rider. Paying your monthly premiums could take a decade or more to accumulate enough cash value to borrow against. Adding the paid-up addition insurance rider to your policy allows you to put more money into your cash value and watch it grow faster. 6. Feel free to borrow. When you're ready to borrow, your loan will be based on the cash value of your policy, which serves as collateral. Simply contact your insurer and request funding. Unlike a traditional loan, you don't have to explain why you need the money, and the loan has no effect on your credit. The IRS does not consider the loan to be income, so it is tax-free. 7. Repay yourself. You will be charged interest, though it will most likely be lower than the interest rate on a bank loan. Although no monthly payments are required, you are expected to repay the loan. Take as long as you want to repay it, but keep in mind that borrowing reduces the death benefit until it is fully repaid. Do yourself a favor and like and subscribe to this channel. Keep an eye on this space for more videos like this one.